Hi, Biconomy friends. Last week has been all about big banks making bolder crypto moves, lawmakers sparring over stablecoins, and Davos executives debating the future of tokenization. We'll unpack Brex's acquisition, the surprise surge in the Japanese yen, bidirectional moves in Bitcoin treasuries, and what might drive markets over the next weeks. We'll also revisit Davos, where tokenization and stablecoins dominated the World Economic Forum agenda. Before diving into the headlines, let's check the charts. Bitcoin spent most of the week between $87,000 and $92,000, consolidating as traders weighted micro risks. Ethereum is facing resistance at $3,000, while Solana steadied near $125 per coin, and XRP around $1.92. Overall, price action was muted as investors waited for clarity on US fiscal policy and Japan's currency intervention plans. On to our highlights. Capital One, the sixth largest American bank, announced a $5.15 billion cash and stock deal to acquire Brex, the corporate card and stablecoin payments fintech. The bank said it plans to integrate Brex's stablecoin rails and issue native USDC-backed business cards, marking one of the first major US banks to embed stablecoin settlement into its core products. The deal underscores how stablecoins have become a mainstream payment rail and signals that traditional banks don't want to miss out on corporate crypto adoption. On the other side of the world, the Japanese yen rallied more than 1% after the New York Federal Reserve conducted rate-checked inquiries, fueling speculation of a rare joint US-Japan currency intervention for the first time in 15 years. Analysts described the move as a potential Plaza Coa 2.0, noting that the Fed's involvement suggests Washington is willing to help stem yen weakness. Traders quickly unwound short positions in anticipation of official action. The stronger yen raised questions about carry trades and risk appetite. A coordinated intervention could ripple through global markets. On another news, retail favorite GameStop moved its entire 4,710 BTC treasury, worth roughly $422 million, into a centralized exchange. On-chain analysts at CryptoQuant think the transfer signals a possible sale. If the company sold at current prices, it would realize about $76 million in losses, since buying Bitcoin at roughly $107,900 per coin. In the other direction, Strive is raising up to $150 million in perpetual preferred stock to pay down debt and buy more Bitcoin. The Series A shares carry a 12.25% starting dividend. Proceeds will retire debt at Strive's Semler Scientific subsidiary, with remaining funds allocated to additional Bitcoin purchases. After acquiring Semler's 5,048 BTC, Strive's holdings could exceed 12,797 BTC, illustrating how some companies are using equity capital to build long-term digital assets treasuries. Also last week, crypto markets briefly wiped out about $100 billion in value as traders braced for another possible US government shutdown. Senate Democrats threatened to block a funding package over homeland security provisions, and analysts warned that a shutdown would delay economic data and complicate the Federal Reserve's decision-making. Bitcoin fell 3% and Ethereum 5% in hours, reminding traders how sensitive crypto remains to US fiscal maneuvering. Now some good news. Crypto custody firm BitGo debuted on the New York Stock Exchange at $18 per share, raising $212.8 million and valuing the company north of $2 billion. The next candidate may be hardware wallet maker Ledger, which is reportedly working on a US listing that could value it at more than $4 billion. Combined, these deals suggest that investors are willing to back infrastructure plays. Last week, the World Economic Forum happened in Davos, where central bankers were schooled on decentralized protocols and the absence of private issuers. This edition was also unusual in that digital assets weren't a sideshow, but a central topic. A panel titled, "Is Tokenization the Future?" put a spotlight on stablecoins being the first global-scale use case of blockchain, with adoption surging for cross-border payments. French Central Bank Governor François Villeroy de Galhau insisted that regulation isn't the enemy of innovation and said central banks must provide a public anchor through wholesale CBDCs. Imagine that. The debate highlighted how stablecoin yield accounts could challenge banks' profit margins. And you know what? The more bank lobbyists fight them, the more consumers may notice how little interest traditional savings accounts pay. Markets were jittery early in the week when President Trump demanded that NATO allies let the US acquire Greenland and threatened tariffs on the European Union, who, in its turn, brought up the possibility of using the Anti-Coercion Instrument, ACI, a law that allows the EU to respond to economic coercion with various trade measures, including tariffs and restrictions on trade and investment. Within 48 hours, the controversy reversed course. Trump dropped his threat to impose tariffs after reaching what he called the forever framework with NATO on Arctic security. The de-escalation helped stabilize risk assets that had been sliding on fears of a renewed trade war. Looking ahead, the Federal Reserve is meeting this week. Futures markets suggest that no rate cut is expected. But I can't help thinking, what if? We'll also monitor if Congress averts another shutdown. And with Davos behind us, watch for follow-through announcements on tokenization pilots and stablecoin yield products. Thank you for watching, and I'll see you next week.